Hello and good morning from Europe. Welcome to our daily markets update. This is Ahura, and we are going to check the markets data economic calendar, which we had in last days till now. And then we're going to check the market expectations from today's data that we will have later. Let's start with yesterday. From yesterday, just like to have a short review of yesterday started with the central bank decision in actually with the European time zone. Started with the Brazilian central bank decision, held the risk at 15% in Japan. We had machinery orders falling in Australia, reserve assets lowered, Australian labor market weakened also, unemployment rate. Actually, unemployment rate was unchanged at 4.2%, right? Yeah, at 4.2%. Australian labor market with the even the unemployment rate was unchanged at 4.2%, but generally the Australian labor market was not such a good. Didn't have such a good data. Eurozone's current accounts lowered the trade balance. They didn't have such a good trade balance. Spanish bond auction, Spanish bond yields in auction slightly increased, but later we had from data from Germany and Italy. They showed that the bond yields slowing down in the eurozone. Construction output in the euro slightly increased. Maybe we can see it's mostly because the lower interest rate that we have right there, and maybe the builders they have a better a better condition to get the loan and build more buildings. We'll see what's going to happen, but generally that even thought it was better than expected. It was not such brilliant numbers. In United Kingdom, Bank of England held the rates at 4%. We know why. We had already a video about that explained in more detail. Go check that video. In Turkey, reserve assets slightly eased. In United States, jobless claims the initial jobless claims sharply fall from 263 up to 264,000 that we had previous week, fell to 231,000, while the market was expecting around 241. Generally, that was a signal of the labor market is not that weak that many were talking about that. That is not such a bad about the U.S. economy. Let's continue with the Philadelphia Fed Manufacturing Index also increased in September. Russian reserve assets get more. South Africa. In the South Africa also the central bank kept the rates unchanged at 7%. With the positive data that we had from United States in past several months, still the U.S. leading index moving in negative territory with 0.5% that we had in the last month in August. Natural gas storage increased in United States as the same trend that we had for API and EIA weekly reports. As the U.S. short-term treasury yields eased, as we had the same trend in the 10 years bonds, 5 years bonds, 2 years bonds, as the central bank deciding to go towards more dovish policies. Argentinian post more, increasing in their trade balance. The surplus increased. The Argentinian trade data, looking at the data that we have from Argentina, maybe it's not an economy that you're looking too much on that, but they show that they have a better economic movement in the past 2 years. Actually, somehow in the past 1 year, actually, we say it's better. Maybe it's if we're to look at that more closer eyes, just better to look at that. Unemployment rates is to 7.6% for the second quarter. Foreign demand for the U.S. Treasury rebounded in July, but overall demand for the bonds, U.S. bonds, slightly eased as the inflation, as the interest rates slowing down. Fed balance sheet was steady. Bank reserve declined in the United States. Bank of Japan held the interest rate unchanged at 0.50%. Without that ongoing political uncertainty and trade tensions with the United States can put the central bank in Japan in a more Cautious condition, while the inflation also slightly eased to 2.7% from previous 3.1%. Japanese also they saw the strong bond inflow, while like more people they got to buy the Japanese bonds, while stocks markets buyers slightly eased as the market now is waiting for rate hike. So which can be also, I mean, this rate hike can have the negative effect in the Japanese stocks, but at the same time, political uncertainty also can add this negative environment. In New Zealand, trade deficit increased while the UK consumer confidence eased. New Zealand spending, while just like while the consumers they're spending more money in the New Zealand, we can see that they are mostly spending from their credit cards. Same thing we can see in United Kingdom also. UK retail sales increased, but public borrowing, especially from the credit cards, increased. That cannot be such a good data, I mean, such a good signal. In Europe, German producer price index fell by 2.2%, more than 1.8% that it fell in previous month. On the monthly scale, PPI fell by 0.5%. Later today, the most important data we have is from the Canada. This is retail sales data, where we expect to see the weaker retail sales. Another reason for supporting the Bank of Canada's 2 days ago's decision on rate cut. Later, we're going to have the US Baker Hughes oil rig and the total rig count that we have in United States, and also for the service traders and investors, quote numbers or CFTC numbers will be very important. The quote report, it is very important for to watch further. As looking at the chart, we can see that while market risk is it's like getting slightly more stable after falling, slightly easing actually towards 17.50. It's staying there. We say, as I say, uncertainty over the most mass meeting that Federal Reserve had yesterday. That uncertainty in the markets can continues. The slightly better than expected economic data and labor market data also supported in line with the other reasons that we talked yesterday about that. Dollar index increasing above 97 area. This is well, despite increasing dollar index, gold didn't fall, and above the following uncertainty in the stock markets, holding its higher rates, same what the silver does. But on the energy market, these data in line with the slowing political or geopolitical tensions, oil and gas price eased slightly. In the stock markets, this uncertainty over Fed decisions can put the pressure on the stock market, because the market really doesn't know where the Fed is going to go. I mean, the Fed's decision was really unexpected. The same thing we can see now, Dow Jones, Nasdaq, and S&P 500, all of them, they are the same. In the cryptocurrency market, in line with the falling stocks, cryptocurrency also slowing down. But on the other hand, I think what I think is that because of uncertainty in the stock markets and economic condition, maybe that can be the positive signal for the cryptocurrency market and Bitcoin. We have to be careful more about our position. Okay, that was the market condition and our overall expectations. Hope it was useful for you. Talk to you soon. Bye.